Hi, this is Doug Howard with Grow Team Strategies. And, one of the things I hear from lots of clients, especially when we first start working together, is, Doug, I really don't understand my balance sheet. I know that every month I get a profit and loss and a balance sheet. I'm not 100% sure why it's so important or what it's really used for. So keep in mind that your balance sheet is really just a net worth statement for the business. Your assets are what you have, and they're basically booked at the value you paid for them. So what you have in the bank is the cash that's in the bank. The receivables you have is the money that's owed to you. But if you have equipment on the balance sheet, it's generally based on what you originally paid for it, less any depreciation you've had. On the liability side, it's really just what you owe. So it could be credit cards, it could be accounts payable, it could be loan balances. And then when we look at what we have, less what we owe, that's essentially on the books what the business is worth. And that's what our retained earnings and our equity basically amounts to. So retained earnings is how much money the business has made from the beginning of time. Off of that, we're also going to see a subtraction for distributions in the current year, and then an addition or subtraction for net profit or net loss that we've made during the year. The thing that's interesting about a balance sheet is it really tells you the condition of the business. So whether it's a bank loan that you're going for or you're trying to put a value on things, the balance sheet is really important. Unlike the profit and loss statement, which resets to zero at the beginning of every year, the balance sheet just keeps going. So in other words, if you have an asset that you no longer have in the company, but it's on the balance sheet, it'll stay there until you get it off the balance sheet. If you have a loan that's been paid off and it's sitting on there with a balance or maybe a negative balance because not all the interest was accounted for correctly, those entries will sit there until we do something about them. So at the end of the year, you want to get with your accountant, go down through the balance sheet, make sure that the things that are on there make sense to you. You know what they are. And if there are lingering issues on there from prior years or things like that, you get with the accountant on the very best strategy to get that stuff cleaned up and off the balance sheet. Because you get a really good shot at doing that once every year, rolling it into the overall retained earnings of the company and starting with a balance sheet that truly reflects what the business has and what the business owes, and therefore the book value of the company. So I'm Doug Howard. Good luck with your balance sheet. If you have questions or anything we can help you with, reach out. But really understanding that balance sheet is super important, and getting it cleaned up at year end is also something you want to make a priority. Thanks.